everyone, MyLee Corona here, eXp Realty, your trusted friend in real estate. I have the honor and privilege of getting to sit here next to my favorite lender, Eric Kimmer with Milestone Lending. Eric, I wanted you to share with us today what are the 10 most common misconceptions about purchasing a home.
First and foremost, number one is you need to have a 20% down payment to get a mortgage. Many first-time home buyers think that they need to have a 20% down payment to buy a home. This is truly a myth. There are several options available for buyers that don't have the ability to save for such a hefty down payment. There's even loan programs available that require no down payment at all. That
is amazing. Eric, tell me, is it cheaper to rent or cheaper to buy?
You know, rent prices have skyrocketed over the last couple of years. Increased rent prices have actually leveled the playing field, making the cost of renting about the same as what a monthly mortgage payment would be. You know, depending on where you live, buying a $150,000 house could potentially have a lower monthly payment than renting a house of equal value. The rule of thumb is if you're planning on staying in a property for 3 to 5 years, buying could be a better option.
Do you need to save more than your down payment?
Yes, there are other items that you're going to need to pay for prior to closing out of pocket, such as your home inspection and your appraisal. Some lenders are even going to require that you keep a couple of mortgage payments, which are called reserves, left in the bank after you close on your loan.
So should you buy at the top of your budget, Eric?
Well, just because you can doesn't always mean that you should. You know, homeowners should know their budget. You know, a new homeowner should be comfortable with their monthly mortgage payment. They should also be able to plan and save accordingly for rainy days. Just always consult your lender to know, to get a better idea of what your budget is and what you're comfortable with.
Are adjustable rate mortgages a bad idea?
There are situations in which an adjustable rate mortgage is a great option for you. If you are planning on paying off your mortgage quickly or planning on selling your home in less than 5 years, an adjustable rate could be a great option for you. ARMs typically offer a lower interest rate than your, traditional long-term fixed rate products. So lower rates mean lower monthly payments.
Is buying a fixer-upper cheaper than buying a home that's move-in ready, Eric?
I think these days most home buyers have seen the DIY shows where people go in, they buy a distressed home, they put some money into it and turn it into their dream home. Well, this sounds great in theory, but it's rarely a reality. Most of the time these projects are more difficult and costlier than they appear to be. Remember that carpet and paint are easy fixes, but tearing down walls is a completely different project. Always consult any type of renovation product with your lender before committing to a DIY.
Do you need a high credit score to qualify for a loan?
This is truly a myth. There are several product options available for home buyers with varying credit histories. For example, FHA loans are available to buyers with credit scores as low as a 580.
Can buyers have more than one lender check their credit?
The rule of thumb is that you can have multiple lenders review your credit within a 14-day window, and it's only going to count as one credit inquiry to your FICO score. This gives buyer the options of talking with multiple lenders to make sure that they're getting the best product and the best rate. Remember, not all lenders are the same.
Is a pre-qualification the same as a pre-approval?
So the terminology can be confusing, so think of them in two different steps. A pre-qualification is a non-binding estimate of what you can afford to purchase based on usually verbal information that you provide to a lender based on your income, assets, and debts. Step 2, a pre-approval requires verification and documentation on your income, assets, and debts. A pre-approval is actually a conditional loan approval where your credit and ability to repay is evaluated by an underwriter. A pre-approval letter actually lets the seller as well as the real estate agents know that you're serious about making an offer because your eligibility has already been vetted by your lender.
So pre-approval actually takes that step further in getting you into the buying process.
Yeah, it is essentially almost a conditional loan approval where all of your documentation has been verified by the lender.
Do lenders require a home inspection?
Lenders do not require a home inspection. However, we always recommend buyers to get a home inspection.
Absolutely.
There are things that could pop up on an appraisal, certain repairs that need to be added. However, lenders do not require a home inspection.
That's really good to know. Hey everyone, thank you so much for watching. If there are any topics that you want me to cover, let me know, and I will do my very best to create more videos just for you. Make sure you like this video and share it with all your friends. Let's talk soon.